Good afternoon, everyone. I am Dr. Jyotish Goswami, Senior Faculty of Accountancy Department, District College. Today I will like to mention some of the important points on recording of business transaction. For any business house, whether small or big, they have maintained two books of accounts. So today we'll discuss about how many types of books of accounts and what are the process for recording the transaction in books of accounts. So books of accounts means recording of transaction is a process of entering the transaction in the proper books of accounts in a systematic manner. Normally transactions are first recorded in a book of original entry called journal. So any transaction occurred in a business house that is generally recorded in a books, that books is known as journal, and it is recorded with the help of authentic documents, which is known as source documents. So there are two different classes of books of accounts for any business house, whether small or big, which are maintained by a business house. They are number one, books of original entry or primary book called journal. And another book is principal book or books of original and final entry or principal and ledger book. And what is books of original entry or primary books? Books of original entry means the books of accounts where the transactions are recorded as and when they take place. The first books of original entry is called journal. The word journal has been derived from the French word jour. Jour means daily record of business transaction. So journal is a book of primary entry for daily record of business transaction with the help of authentic documents. Firms having limited number of transactions record them in a one primary book called journal and post them to the concerned ledger account. There is a format for recording the transaction in primary books, which is known as journal entry. There are 5 columns. First column is date. Under date, the transaction occurred is maintained. Number 2, particulars. Under particulars column, we write the what will be the debit and what will be the credit for each and every transaction. Next, ledger folio means when it is recorded to ledger account, head of account, the folio number will be given under this column. Next, 2 columns for amount. One column is debit, another column is credit. As per double entry system, when we record the transaction, there is every debit there is a corresponding credit. That is the basic principle of double entry system, and that system is followed when we record the transaction in journal, which is known as primary entry of transaction. So there are so many features of a journal. Number 1, it is original entry. So journal is a book in which the transactions are recorded as and when they take place. Hence, it is called a book of original entry. Next of features is first step of double entry system. Recording of transaction in journal is a first step in the process of double entry system. Both the debit and credit aspects of every transaction is recorded in the journal according to the double entry system of bookkeeping. Next important features for journal is chronological order. In journal, transactions are recorded in a chronological order, that is in order of date. So it is the very important. When a transaction occurs, we have to record the transaction with the help of authentic supporting documents, that may be voucher, case memo, money, etc. And it should be recorded on chronological order. Another important feature is daily record of transaction. A journal is a daily record of business transaction taking place on a particular day. Another feature is explanation of every entry. After recording the transaction, why this transaction is recorded for that purpose, an explanation is or a narration is required. So another feature is explanation of in every entry. Each entry in the journal is followed by a brief explanation, which is known as narration. The translation, which is called narration. And another feature is books of primary record. A journal is only a book of primary entry. All the transactions recorded in the journal are subsequently transferred to the principal books of accounts, which is known as ledger. Because when you posted the transaction in ledger, it highlighted the result of individual result of each and every head of account. So it is possible only with the help of journal entry. Next, what are the function of journal? There are so many functions of journal. First point is keeping record in chronological order. The main function of journal is to keep a chronological, means date-wise record of all the business transaction. Number two function is basis and source for posting. Journal provides the basis and source for posting into ledger. That is the very, very important function for journal. Next, maintain the identity of transaction. Journal helps to maintain the identity of each transaction by keeping a complete record of each transaction at one place on a permanent basis. Another important function is or advantage is immediate record. As the transactions are entered in the journal as and when they take place, the possibility of omission of a transaction in the books of accounts is reduced to a great extent. So it is a very, very important function or advantage, that is immediate record of transaction. So the basic principle of journal is that when a transaction occurs, it is immediately recorded in journal. Next important function or advantage is easy location of transaction. As transactions in journal are recorded in chronological order, it is very easy to locate a particular transaction as and when required. So any problem is arise, to detect the errors or fraud, etc., we can detect the location of the transaction or location of the fraud and errors with the help of journal entries. Another important point is easy posting to ledger. The analyzing each and every transaction into debit and credit aspect as per double entry system of bookkeeping, the journal facilitates the easy posting into ledger. Ledgers means under the various heads of accounts. Next important advantage is facilitates cross-checking. As the transactions are posted into ledger from journal, it facilitates cross-checking of ledger accounts in case a trial balance does not agree. We have to prepare a trial balance after completing ledger. All the balance of debit and credit balance are to be shown in a particular statement, that is called ledger. If any differences arise, it is easier to detect the errors with the help of journal entry. Next point is permanent records. Since all transactions are recorded at one place in the journal under chronological order as per date wise, the identity of each transaction is maintained on a permanent basis. So those are the advantage function of journal entry, which is known as books of original entry. So entry will be passed in journal with the help of authentic documents like voucher, money receipt, and other. There are so many types of source documents. And another important books for any business house, whether small or big, they have to maintain ledger. Ledger means it is recorded as per heads of account. So what is the basic concept of ledger? So ledger is a books of account which contain a condensed and classified record of all business transactions posted from the journal. It is also called the books of final entry. Since all transactions are ultimately recorded in the ledger, in this book, separate accounts are opened for each account head, and all transactions relating to a particular account head will be posted in that concerned account. So, ledger means it is simply disclose the result of each and every account individually. For example, there are so many transactions regarding goods sold on credit or cash, etc. When you record the transaction in such ledger, we can ascertain how much goods sold for cash as well as credit. That will be known with the help of ledger account, because under ledger account we can disclose or we can ascertain the balance of each and every head of account. That may be salary account, how much amount expended for salary, what is the cash balance. There are so many sources of inflow of cash as well as outflow of cash, and after that how much cash is available, it will be known with the help of cash ledger. Like that, there are so many types of ledger accounts to be maintained by business house with the help of journal entry. Next, advantages of journal. Number one advantage, condensation of scattered information. So the ledger bring out the scattered information from the journal. It shows the condensed information under each account head. So with the help of ledger, we can ascertain the result of each and every account or head of account individually. Like sales ledger, it discloses the how much sales made by the organization, as well as purchase ledger, it discloses the how much goods purchased by the business during a particular period of time. Like that, it discloses the result of each and every head of account. Number two advantages, full information at a glance. As the ledger records both the debit and credit aspect in two different sides, the complete position of an account can be ascertained at a glance. Next, another important point is balance. At the end of a specified period, that may be monthly, yearly, quarterly, etc., the net effect of transaction on a particular account head can be ascertained by finding out the balance of that account. For example, how much is due from a customer, or how much is payable to a creditor, or what is the total amount of purchase, or what has been the expenditure on different heads. All this information can be ascertained by balancing the account appearing in the ledger. So it is the vital part for ledger. When we prepare ledger, we can ascertain the balance. It may be debit balance or credit balance. So to know the balance of each and every account, the balancing is the vital part for any business house to know the each and every balance amount. Next, another important point is trial balance. As both the aspects are recorded, the net debit effect and the net credit effect of the accounts must be equal on a particular date. This is verified by preparing a statement called this trial balance. This is possible only if the ledger accounts are maintained. So, without ledger account, we cannot prepare a trial balance. And trial balance is the vital information system for any business house, because it is a sheet or list of debit and credit balance of different ledger account as on particular date. So with the help of preparation of ledger account, we can ascertain the true and fair view of the transaction recorded in the books of accounts, whether journal or ledger. So it is possible only after balancing the ledger account. Another important point is preparation of final account. Ledger is the storehouse or balance of heads account for all business transaction. So for all information relating to the transaction, ledger is the vital part. And for preparation of final account, as well as trading and profit and loss account, it is possible only through ledger account, because in facilitate the preparation of a trading and profit and loss account from the balance of revenue and expense account, which will be shown under ledger. It also facilitates the preparation of a balance sheet to know the position of assets and liabilities from the balance of assets and liability and capital account, which is prepared under ledger. Next, trial balance. As both the aspects are recorded, the net debit effect and the net credit effect of the accounts must be equal on a particular date. This is verified by preparing a statement called trial balance. This is possible only if the ledger accounts are maintained. Next, preparation of final account. Ledger is the storehouse of all the business transaction. So it is the vital part for ascertaining the final account, means trading result of the organization as well as the position of assets and liabilities, which is possible only with the help of ledger account. There are so many objectives of ledger account also. Number one, information regarding debtors. A trader can know the amount of money receivable from various customers and others who are known as debtors. So debtors means to whom goods are shown on credit by the trader. So with the help of ledger account, we can ascertain the how much amount is receivable from various debtors. Next, information regarding creditors. A creditor can know the amount of money payable to various suppliers and others who are known as a creditor. Creditors means from whom goods are acquired or purchased by trader on credit. So with the help of ledger account, we can ascertain how much amount payable to various creditors who supply the goods on credit to our business. Next important objective is information regarding purchase and sales. Total purchase of goods and the total sale of goods during a specified period can be known by preparing purchase account and sales account, which is vital part of ledger. Another important objective is information regarding revenue and expense. The amount of revenue earned from different sources and the amount of expenses incurred on different account heads for a particular period may be known from the ledger account. So, for any business house, the regular nature of income is known as revenue and regular nature of expenses is known as revenue expense. So, how much revenue expense is incurred during a particular period of time and how much revenue is earned during a particular period of time is to be known with the help of ledger account. Another important objective is information regarding assets and liabilities. The amount of various types of assets such as land, building, plant, machinery, cash in hand, cash at bank, etc. and the amount of various liabilities can be obtained from ledger account. So ledger is a very, very important to know the position of assets and liabilities. There are so many assets acquired by a business house. There will be land, building, plant, machinery, furniture, etc. Like liabilities, bank loan, credits, etc. Those are to be known with the help of properly recording in ledger account. Next important point is information regarding revenue and expense, information regarding assets and liabilities. Another important point is there are two types of ledger, subdivision of ledger. One is personal ledger, another is general or nominal ledger. So personal ledger means the ledger which contain the accounts of person, firms or organization to whom goods are sold on credit or from whom goods are bought on credit is known as personal ledger. Some organizations subdivided the personal ledger into two parts. One is debtors ledger or sales ledger, another is creditor ledger or borrower ledger. So debtors ledger means to whom goods are sold on credit, that is recorded in a particular personal ledger, that is known as debtors ledger or sales ledger. Again, creditors ledger means from whom goods are purchased by the business on credit, that is known as creditors ledger or borrower ledger. So these types of credit sold to customer as well as credit purchased from the supplier are recorded under two personal ledger, One is known as debtors ledger, another is known as creditors ledger. These are discussed below. Number one, debtors ledger or sales ledger. In this ledger, the account of all debtors for goods are maintained. Posting is made from sales day book, sales return book, cash book, bill receivable book, and journal proper for recording affecting the accounts of debtors. And credit ledger or bond ledger, in this ledger, the accounts of all creditors for goods are maintained. Posting is made from purchase day book, purchase return book, cash book, bills payable book, journal proper for the transaction affecting the accounts of creditors. Another book is known as general ledger. This ledger contains all accounts other than the account of debtor and creditors for goods. All accounts falling in the category of assets and liabilities except debtors and creditors for goods, capital, revenue, and expenses are maintained in this ledger. For example, if a machine is sold to Ram on credit, his account will appear in the general ledger. Again, if goods are sold to him on credit, his accounts will appear in the debtors ledger. General ledger is also known as impersonal ledger or nominal ledger. I would like to mention there are 8 types of subdivision of journal for big business house. Generally, for the small business house, they maintain all the business transaction under one book, journal book. But for the big business house, the business transactions are recorded under journal and it is subdivided under 8 heads of account because there are so many transactions occurred for big business hours, so it is not possible to record all the transactions under a single journal book. For that purpose, they subdivided the journal under 8 heads. Out of that, number 1 is purchase journal. Under this journal, purchase of goods from supplier are recorded in chronological order. Number 2, sales journal. Under this journal, any goods sold on credit to the customers that is recorded. Number 3, purchase return books or return in order books. Under this journal book, any goods returned by the customer is recorded. Number 4 book is sales return or return outward book. Under this journal, any goods returned by customer to us, it is recorded. Number 5, bill receivable. Under this book, any goods sold on credit to customer, a authentic document is required. For that purpose, a bill is drawn by the seller to customer, and if the customer accepts the bill to pay the money within a certain period of time, that is known as bills receivable. That is also another part of journal. Another journal is bills payable. Under this book, when goods are purchased from suppliers, a document is sent by them to pay certain sum of money with proper stamp, and if we are agreed to pay the amount as per that mentioned in the documents, and if accepted the bill, it is known as bills payable. So those are the 6 points of journal proper. Another is sketchbook. So any transaction occurred in a business house, all cash transactions, whether capital nature, revenue nature, that is immaterial, all cash transactions are to be recorded in a particular journal book. That journal book is known as sketchbook. And last one is journal proper. Any transactions which are not recorded under these 7 categories of book, that is recorded under a special book that is known as journal proper. So today I discussed regarding books of accounts for small business house and big business house. For any business house, there are 2 types of books of accounts, and I think this analysis will help the student to know the basic knowledge of books of accounts. Thank you, everyone.